Walk me through what is underpinning right now, the factors behind that better sales growth outlook for you.
Well, Jonathan, thanks for having me. And look, we've been undergoing a transformation to shift more of our business to recurring revenue and software subscriptions, and we've made a lot of progress. When I took over as CEO, we had roughly $3.4 billion in subscription software. We exited last year at the end of July with almost $12 billion. So we have much more predictability in our business. We have visibility to software revenue that hasn't been billed yet to our customers. And we had a remaining performance obligations last quarter of $30.9 billion. You couple that with the success we're seeing in the cloud space with web scale providers, the 5G transition, the Wi-Fi 6 transition, hybrid work, hybrid cloud. There's just so many tailwinds right now that we feel very good about where we are. And that was reflected in our Q4 product orders that were the highest growth in a decade at over 30%. So it's we wanted to express our confidence in the future, and I think we did that yesterday.
Your confidence in sales, Chuck, you know what the analyst community are talking about? They're talking about how much of that is going to fall to the bottom line. This came from Jefferies. We assume there's some conservatism in the guidance, as they'll certainly pick up some margin improvement as the business mix shifts towards software. Can you walk me through that, the decision to upgrade the outlook for growth, and just how much of that you can leverage, how much of it falls to the bottom line, given the transition you've just described?
Yeah, Jonathan, so we guided over the next 4 years 5 to 7% revenue growth and 5 to 7% EPS growth. And there's two real factors in the near term that are influencing the EPS side. Number one is that there are so many of these areas that I just described that we need to invest in. We made a decision to invest in these new silicon and new platforms that allowed us to insert ourselves into the next architectural transition with cloud players. And there's so many, there's 5G and all the things that I mentioned already. And then the second piece is for some period in the foreseeable future, we have increased costs from a components perspective, from a COGS perspective, that is also negatively weighing on our gross margin. And so we think that over time, we will absolutely continue to see the benefit of the higher margins from the software business. But right now, we felt like we needed to be prudent given the pressure from a components perspective.
Chuck, on the components, can you give me a time horizon, just your base case expectations? How much longer are you expecting these difficulties, if we can call them that, I think we can, to persist? Is it through next year, into 23? What is it for you, Chuck?
Well, I was listening to the prior discussion about it not just being semiconductors, although that's certainly a big issue, but it's power supplies, it's substrates, it's memory, and then we have transport constraints at ports around the world. And so our current view is that it will not begin to get better until at least into the middle part of next year. And it's still very fluid, so we're not even, we don't have a high degree of confidence on that yet. But we do have, Gartner rated our supply chain team #1 in the world across all industries. So what I do know is that our team is working hard, and at the same time, we're focused on all the positive aspects of what our customers are dealing with relative to the return to office, the hybrid work, 5G, all the positive tailwinds that we feel.
We catch up with a lot of economists. Chuck, I know you watch sometime. They all talk about these issues fading over time. Transitory, the T word, is the word at the moment. Do you sense a bit more permanency? You're in the market, you operate, you talk about supply chains, logistics, all of that. You're a company, a CEO. Do you sense some permanency to some of this cost pressure?
I think there's aspects of it that will be with us forever. I mean, when you see wage inflation, typically that doesn't go away, right? And so, but there are also, I don't think there's one answer. Like we see memory prices go up, come down, and that usually is kind of transitory. But some of these other increases that we've seen are sort of new to us, so we haven't experienced them in the past. So we'll have to wait and see. But as we've talked about, we've like others have implemented price increases. We'll continue to look at what we need to do in that space. But all we're focused on right now is trying to do the best job we can to meet the customer demand that we're feeling.
Do you sense some price tolerance in conversations with customers? Increased
right now,
price
customers
tolerance.
want technology. They want this stuff so badly that they're willing to pay more. And so, we're trying to be really fair about it, but there's a lot of cost in the supply chain. But the reality is that as our customers return to the office, they're modernizing their infrastructure. They're investing in this new hybrid cloud world. They're investing in all of these new transitions, and our job is to just try to get the technology into their hands and get the outcomes that they're trying to achieve as fast as we possibly can.
Chuck, final question from me. Just in terms of the administration, they're focused on this as well. Have you spoken to the admin? What have you told this government?
Well, we talked a lot about the infrastructure side of it, and we're very focused on the digital divide. And this broadband aspect is so important. We've been talking about it for years. Obviously, the physical infrastructure for our country is super important, but we learned during this pandemic, we have to get broadband to every household in this country. We have to make sure that these children and these families have access to it, because that opens up opportunity, and that actually will help us. That's the first thing we need to do to actually help with some of the inequality that we see in this country. So we're very supportive of that, and we spend a lot of time talking to the administration about it, as well as supply chains and semiconductors and everything else.